What is up, everybody? Welcome to the Halftime Snacks podcast. This show features short interviews that you can listen during the halftime of your favorite sports events. Every Tuesday, I host fun conversations with talented people in the sports industry where we'll learn from their stories, knowledge, and experiences. So go grab your favorite snack and come snack with us. Are you ready? Let's go! Today's episode features a massive guest from the world of sports investments. He began his career as an investment banker, then worked for more than 3 years as a director of international strategy for Topgolf Entertainment, where he led all investments and strategic operations for Topgolf International Business. Today, he leads the investments in sports and entertainment for SuRo Capital. SuRo Capital is a venture capital fund that seeks capital gains from private equity investments. The company, which actually trades under the symbol SSSS 4S, has an investment philosophy that is based on promising high growth, venture backed investments across different industries, including sports and entertainment. So grab some snacks because I can guarantee this episode will be as good as it gets. Ladies and gentlemen, allow me to introduce Adam Bates. Adam, welcome to the Halftime Snacks. How are you?
I'm doing fantastic. Thanks so much for having me, and really excited to be here.
Thank you for taking the invitation to join us today on the Halftime Snacks. I always kick it off with an icebreaker, and the one I have for you, it's actually a creative one. I came up with it. Would you rather have the golf swing of Tiger Woods or the shooting ability of Steph Curry?
That is a great question. I'm a little bit biased. I'm a proud 14 handicap on a good day, so to have the swing of Tiger Woods would make my life a lot easier. Certainly on the golf course, definitely match play with friends when I've got a couple of dollars on the line. So unfortunately, I don't think with any amount of coaching I'd have a shot like Steph Curry. So I'll have to pass on that and go with Tiger Woods.
That's great. That's great. I'm sure that also for the business side of it, I'm sure that it works, right?
Oh yeah, no. When you hit the ball out of bounds, or you hit a fan, or you hit the ball through a window, it really makes doing deals on the golf course a lot harder.
um, Adam, it's great to have you here, and of course we're gonna get into everything related to SuRo and investments and how you're looking at things currently. But before that, we always want to take a step back and talk a little bit about the person and who you are, what's your story. So tell us a little bit about your background, Adam. Were you always dreaming and pursuing leading sports and tech investments, or did it find you? Tell us a little bit about how it all came together.
Sure. So I've been a lifelong sports fan forever. I grew up in Dallas, Texas. I am a diehard Dallas sports everything fan. When it comes to the Cowboys, the Mavs, the Rangers, the Stars, I think that's sort of where I grew up around, and that's sort of how I've framed my life up into this day professionally. I had my bar mitzvah at 13, and the theme of that was gambling. So it kind of worked perfectly into today, where now I do investments around sports and gambling. So it's pretty exciting. Moving sort of from college into the world of finance, I was really focused on trying to figure out something that suited me and that really was exciting. And so banking, while exciting, I knew there was something a little bit deeper. And so I ended up working at Topgolf for about 4 years in a couple of different roles. And as I mentioned earlier, lifelong golfer, lifelong sports fan. So it didn't take time to fall in love with the company and the culture there. I started pretty early on at the company, working more on the domestic development side. And then, of course, as you mentioned, went over to the international side and worked on that development, which was incredibly exciting as a young 25-year-old getting to travel around the world and play fun golf courses and execute deals and work on behalf of a great company. It was certainly an experience that I cherish, and definitely one that made me a better investor, a better person. I met my wife at Topgolf, so that was exciting. And that ultimately led me to the next phase of my career. I went to go work for a prop tech startup out in the Bay Area. Quickly realized that I missed my passion for sports. I missed my passion for for that part of the industry, and that led me to SuRo. And I actually came to SuRo without the intention of specifically designing something in the sports vertical. And it's interesting because it really spawned out of a decision that actually came from PASPA being repealed and there being just an opportunity there. And I'm fortunate enough at SuRo to have a great team that's really open minded and a team that's willing to take a chance on good opportunities when they see it. And that's really what SuRo Capital Sports was born out of.
Yeah, that's amazing, and something that something that I realized on your profile is that you joined SuRo Capital in April 2020, and that is probably the beginning of the pandemic. If someone like some may argue was a little bit before, but it was right at the beginning. So I thought it was a good question to ask if it was like a big challenge. Like how big of a challenge was it to join Suro Capital right at the beginning of the pandemic, getting adapted to the whole like new company, new system, new people, all through like remote or like I don't know how it happened, but maybe you want to share with us
Sure.
like how exactly that happened.
Yeah, definitely. I started interviewing in February, and as I sort of got through interviews, the funniest thing happened. Everyone started working from home, and all of a sudden, I was doing Zoom calls all the time, and it was a natural transition. I was working remotely at Home Light and accepted the job at SuRo, who was working remotely when I started. The head of SuRo Capital is in New York. The most of the fund is in San Francisco. I was in San Francisco at the time. And so it was definitely weird to be on Zoom calls with people that were all in the same city as me, about between 1 and 3 miles away. But it worked pretty naturally. SuRo is one of those companies, and a lot of people say this, but where you need to be a self starter and you really need to drive yourself to be the best investor, the best operator you can be. Um, the remote part of it fostered that in a way for me because there's really two types of culture, right? When I was at Top Golf, we were in the office every day. And then when I joined the international team was based in London. So working remotely has been part of what I've learned throughout my career. And that culture shift was something that I brought over to SuRo, which was, you can be on Zoom calls as much as you want during the day. You still need to be able to start yourself up. And, to be quite honest, when we started doing return to office and I was flying up to New York and flying up to San Francisco more to see the team, it was actually really refreshing. I'd say if I had to prefer to be in an office or be at home, I'd probably be in an office only because I love chatting with people. I love the conversations that exist at the water cooler. I love the little things you learn. I feel like every time I go back into an office, I learn something just a little bit new. And so that part I miss, but on the whole, getting acclimated to what SuRo had from a remote environment, and obviously now I live in Atlanta, Georgia, and the rest of the fund is in New York and San Francisco, so I'm still remote 2.5 years later, and all those things still sort of persist, and you deal with it as best you can.
Right. That makes total sense, and I think that fact that you're mentioning that before that, even in Top Golf, you already like kind of like adapted yourself to it was just much more easier, and allowed yourself to smooth into Suro in a more smooth transition. Adam, I do want to get into the whole like investment side, and I do want to maybe get your mental blueprint for finding great investments and entrepreneur in sports. You guys invested in a company named Pickup, which was actually featured on the Halftime Snacks quite recently. Not sure if you checked the episode out, but you should definitely, and
Of
everyone
course I
should
did.
check it out. But shout out to them, of course, great company. But in terms of you as someone that leads the whole investment in sports, what are some green flags that you are looking for when you're checking out companies or founders to invest? What are some good things that you're looking for actively when you're presented with new companies or new investors? Sorry, new founders.
Sure. So I would say there's a couple of different things that I look for that at a high level are sort of the must-haves. I think of must-haves, nice-to-haves, and complete non-starters as sort of the framework for a lot of different things, but specifically investing. One of the things I like to see founders try and do is solve a problem more than just 15% or 30%. So, whether you're creating something completely different or revolutionizing an industry, or you're creating a feature that really no one else can make, I think that to me is the first step. A lot of people talk about giant market, a lot of people talk about founder drive. I think those are really important. But if you're creating something at a company which really only impacts the broader industry or the broader customer base by about 15 or 30%, I'm not sure that that's completely investable. And the reason being is that that's more of a standalone feature to me than it is a scalable solution. And if you look at people like Pickup, as you mentioned, I mean, Pickup to me is completely changing the way that fans are interacting with teams, leagues, and sports in general. And I think that fan engagement shift fits a thesis I have for the broader space. And it's just one sort of microcosm of a broader industry that's all shifting at once. And that really is why I found the sports and entertainment industry so investable at the beginning is, and when PASPA was repealed in 2018, it created an entire new landscape for gaming and gambling opportunities. And what I quickly realized is the gaming and gambling industry converged on itself much faster than people thought. And so when it comes to green flags, the whole industry was one green flag to me. And it was just about finding the right opportunities. And SuRo Capital primarily is a late stage venture capital investment fund. So names like Rent the Runway, Lime Scooters, Course Hero, Forge Global, that sort of rounds out the typical SuRo Capital portfolio. And so this was a bit of a departure for what we normally do. And I think the reason for that was the green flag opportunity, in that the opportunities aren't in the late stage for sports and sports betting right now. They really are in the early stage. And the early stage companies are the ones, at least right now, that are changing that landscape more than 15 or 30%.
Yeah, and I like that you think about like it as a macro, as a what's trending, right? You talked about this since the beginning, like how you kind of understood how betting and gaming was starting to become a thing. And then also you also think about like the micro, right? The whole like what feature or what solution is this company trying to solve? In terms of like Charlie Munger always says that you have to invert as well. So I'm going to invert the question. What are some of the red flags that you kind of like look for? Is there something that you have in mind, where like you see that you don't like, then you're absolutely out, or something that you consider really a red flag for founders or for companies?
Yeah, there are a few. I would say the biggest one for me is when you try and throw a dart at a wall and draw the dartboard around your dart so you're always hitting the bullseye. I think that's a red flag. And what I mean by that is, if you have a whole host of different opportunities in front of you and you're really spread out and you're simply trying to wait and see what turns out the best, I find that to be a really tough strategy to scale, only because, especially given my experience at Topgolf, when I started there, the company was just a venue company, and they made a very dedicated shift into media, into Top Tracer, into international, and those were intentional. And while not all of them worked out, I learned that in order to scale, there has to be a lot of intent when it comes to strategy. And so, rather than throwing the dart at the wall and drawing the board, having something to aim at and having somewhere to go that is specific and intentional, I find to be much more investable than a company that might say, we have a TAM of 650 billion in front of us, and all we need to do is capture 10% of it. We don't know which 10% of it we're going to capture, but it's going to be some 10% of it. I find that to be challenging. And the other thing is, and I come across this very infrequently in the sports space, just founders that might not be committed as much to the space, whether it's people from a different industry that are saying, hey, I'm really trying to capitalize on this because it's buzzy, or I'm really trying to capitalize on this because it's cool. I find that to be challenging. If you look at the CEOs of all the companies that we've invested in, everyone is, jumping into the pool, 2 hands, 2 feet, cannonball deep, because they're passionate about it. And I find that passion excites me, it excites customers, it excites users. Without that passion, it's really hard to back a founder or to back a company.
Yeah, that's a great point. I think I'm a firm believer that we always learn more from our failures than from our successes. So, and I'm sure that you have, plenty of failures of times where you thought this was a good thesis, or you thought this was a good investment, or this was a good founder, probably failed. But I wonder if you can maybe share with us. You mind sharing one story of a time when your investment thesis failed? And the story of how you reacted. I think that would tell us a lot about how you think about things, how you learn about things, and how you react to those things.
Sure. Well, I can give a couple examples. I've failed plenty in my life, so I have a ton of examples to share. I would say, if I look back at my top golf days, one of the things I was really fortunate to do was to go out and search for joint venture and franchise partners to help scale the business. And one of the things I learned pretty early on was, what people's intentions were, and the need for alignment. And like I said, I was very fortunate as a 25-year-old kid to be trusted with a pretty tall task of helping scale a business internationally. But I didn't really have enough chops or investment, uh, I guess, failures or successes behind me to know what I was looking for. So going over to certain countries and certain partners and being really excited and hearing all the buzzwords, and then only to find out later that they're simply utilizing you for an ancillary reason, and it was purely a marketing scheme. Those types of failures really put it into perspective. Kind of what I was saying before, that passion and alignment is incredibly important. And I kind of run my entire life, both my investment life and my personal life, off of transparency and flexibility. And having seen people not be as transparent with me as I am with them, I think that's one thing to look for as I sort of go through. And at SuRo specifically, I'm fortunate to have less failures because I have a fantastic team around me that tells me when I'm wrong. And trust me, I'm plenty stubborn, and I like to believe I'm right a lot. But I think I'm blessed to have a really good team around me that tells me when I'm wrong. And we've had a couple decisions that have shown up at our investment committee where I've been pounding the table, and we look and do a 2-year post-mortem, and the company's 50% lower than where I wanted to invest at. So I'd be remiss to say I was right all the time. I wish I was. Believe me, I definitely wish I was right all the time. But I've definitely had my failures, and it's made me a much better investor. I think the team at SuRo is incredibly smart and thoughtful, and as a group, they've all made me a much better investor. And it's one of the reasons why I feel like at this point in SuRo Capital Sports and in SuRo Capital, we are so uniquely positioned to drive value to our shareholders, and uniquely positioned to provide value to companies, because we've all grown so much. And being in a downturn right now and having a lot of money to invest, I think is a really unique position to be in. And having had those failures in the past, and having seen some of those investments go south, and seen what's transpired in the broader market, we've learned a lot, and we're able now to take those learnings and really drive some real value.
Yeah, and it sounds like, I mean, transparency, which you mentioned, and also alignment, which I think alignment is basically people that say and do the exact same thing. I'm not sure if that's coherence or congruence of what your intentions are, and your actions like aligned to that, right? I do think that those are two values that I'm sure that you look for in founders and companies that you look to invest, because those are things that you resonate with and that you believe that are there are good values to have as founders. And I'm sure that I'm sure that now you saying this, it proves that your track record of investments, not only through SuRo, but maybe personal life, right, your wife or your friends or the people that you surround yourself with, that is also going to be consistent along all your investments in life, not only in sports.
I think it's really hard to have different values in your business life than you do in your personal life. And one of the things I've got I've got the same 10 buddies from high school that I've known since we were all in diapers, and my buddies from college and I talk every single day. I find, it's not that I don't like making new friends. I love talking to people. I love making new friends, but I'm very committed to those that are close to me because after years and years and years together, we all share those same values. So I find it pretty great to be in a position where I could sort of use the values I have in my personal life, transition them into my business life, and I'm really blessed to have founders that I work with and all the companies that we've invested in. I've got a great relationship with because at the end of the day, they all sort of fit the bill for people that I want to be friends with and grab a beer with at the end of the day.
Right. Yeah, and it's also a matter of consistency, right? Like you have to be consistent with your values at home, as you said, and your values at the business and with your friends. Because I do think that if you kind of like drift away in one of those, it's eventually going to show up in the other areas. So yeah, it's probably a good idea to be consistent. But as again, going back, it's a matter of values. So I respect that of you from you, Adam, and thank you for sharing. I want to talk, maybe switch the conversation a little bit to some interesting and important topics that are going on, around the news and around the whole world, the whole macro environment. And this is something that I found, and I'm going to quote here from SuRo's financial statements. Found them on the risk section of the financial of the 10K. You guys stated economic recessions or downturn could impair our portfolio companies and harm our operating results. We are exposed to risks associated with changes in interest rates. Inflation may adversely affect the business, results of operations, and financial condition of our portfolio companies. These are all things that are happening as we speak, right? There's the conversation around recessions, a recession coming up. There's interest rates yesterday, 75 basis points were raised in states, and then of course inflation is the conversation that everyone's talking about. So explain to us maybe why those matter for the business of SuRo Capital. Why those matter to you? Why those matter to the whole business of the venture capital space?
Sure. If you look at the broader, let's start with the public tech markets. The public tech markets have been battered this year so far, and I think for many reasons. One of which is certainly inflation, another of which is rising rates. I think there is a premium on cash flow positive companies. They always say cash is king, and it's never been more important than right now, especially as things are tightening up. And as you look towards the private markets, you're seeing a very similar thing. If you look at any article on TechCrunch, half of them right now are talking about tech layoffs. So what we do at SuRo Capital, investing in high growth, institutionally backed private companies, that is an area right now that is pretty heavily impacted by this kind of stuff. Simply because if you think about how these companies are successful, they need money in order to innovate. They're never going to be cash flow positive on day one, simply because that's not how they're designed. And so as a result, as people become more weary to invest, and as people are more focused on cash flow, companies that need money to go ahead and innovate become inherently less valuable. So I would say that's generally the view on our portfolio companies. The way that I think about the economy and how it impacts all the way down to the pre-seed companies, it's all an economy for the next step. So the late stage private markets are trying to feed an economy for the public markets, and the early stage private markets are trying to feed an economy for the late stage markets. So the way that I think about it is, as one goes down, everything trickles down as a result. So the public markets start crashing in Q1, then the late stage private markets come, and then the early stage markets come. Simply because if you're trying to feed into the next economy, ultimately you have to be there to serve whatever the needs are of the next stage. Right now, if I think about early stage valuations, they are the least impacted out of all three categories, with late stage coming next, followed by public equities, which obviously you can turn on CNBC or Bloomberg and go ahead and see what carnage is going on there. But to be quite honest, I don't think when it comes to early stage companies, as much about valuation on a very sensitive basis as I would for a later stage company or public equity. And the reason being is if I'm underwriting an exit of 20x or 30x or 40x, if I'm investing in a company with an $11 million valuation or a $13 million valuation, while impactful, it's negligible at the end of the day. And it goes to my thesis around being founder friendly, and the way that I like to approach investing in general is, like I said before, flexibility is incredibly important. And to lose a deal that you think is going to exit around 250 million over a $2 million step up in valuation, while on a percentage basis, maybe 20+%. At the end of the day, you'd be kicking yourself if that company went public at 500 to $1 billion, and you didn't invest because you were hung up on a couple $1 million on the front end.
Yeah, and the way I like to think about it, and correct me if I'm wrong, of course, you're the expert, but
I don't know about that, but I pretend to be on TV.
the way I think about this is that usually, early stage, primarily, the way you evaluate or know the value of the company is that you bring all the like future cash flows down to the present moment, and you discount those cash flows by the current interest rate, right? So when the rate rises, essentially, through like the formula, the value of future cash flows also decreases because of the interest rate. With higher interest rates, your those cash flows are worth less today, so those valuations tend to get lower, and that is the whole point around like the opportunity cost on taking that same capital invested on an investment account that's going to provide a 5% yield. You're going to have to evaluate again if it's worth it to give it a shot. Although you could argue that probably sometimes when you're talking about venture investments, you're not looking for just regular returns, right? You're looking for abnormal returns. So but talking about this, how that influences your conversations, the things that goes on the SuRo's office or on different calls, how that influences the decision making process of you when you think about a new company. Does this play an important role in all those conversations, or do you think that this is just inherently integrated in the whole like due diligence process and analysis of a company when you're just actually hands on deciding if you want to invest in a company?
Sure. Well, a couple things there. First is mathematically, you're absolutely right. The value of the company, on a discounted cash flow basis, would be driven, primarily by interest rates and future cash flows. And the way that we look at it internally, we certainly take the broader macroeconomic environment into account. I would say that we do it in a way that's proactive, not reactive, looking at interest rates and looking at where we believe the market's headed, is the way that we think about investing on a much broader basis than just sports. On the sports side, I think it probably has less of an impact. And the reason being is the time horizon for liquidity on these companies, it's much longer, right? If you look at an environment today and you're driving an investment decision on a company that's going to be liquidated in 5+ years if things go well, I think there's a disconnect there. If you and on the inverse of that is if you're looking to make an investment in a company that's either potentially going to go public via SPAC or is going to IPO in a couple of years, you need to be much more sensitive to what's going on in the macro environment. We're really fortunate about having access to the public markets and the late stage private markets, and one of the reasons why I believe we have such a valuable asset here at SuRo is because we really own, at least in sports, the value chain from pre-seed to IPO and beyond. So if you look at most sports investors, a lot of them exclusively deal on the early stage side, and they're all fantastic early stage investors. And where I think we have a differentiated aspect of what we do is we really know how to scale businesses. And that's one area I believe that we sort of rise to the top, having done late stage investing almost exclusively and having a lot of late stage startup expertise at our fund. And not only that, but we're a publicly traded fund, so we have access to the capital markets and certainly can be apprised of what's going on pretty quickly there. Having all of those intertwined in one group, I think provides a really unique asset. And it allows us to, when we have our conversations, not be reactive and not just think about what's going on in the next 20 seconds in the market, but rather take a more holistic view and say, okay, let's take a real estate company, for example, right? Because interest rates are up right now, mortgage rates are rising. Where does that leave housing prices? Where does that leave the velocity of housing? If I look at the sports market, what happens to the consumer when inflation occurs? Is the sports better protected from inflation in a way that we haven't seen before? And a lot of that, quite honestly, we're learning right now. Right, the last time we had an economic downturn, I was a freshman in high school with a much higher pitched voice than I have now. So it was certainly a different time. And if you think about what's happening now, you can't necessarily compare it to a specific downturn, but
Hmm.
we have enough expertise at our fund to take learnings there and to take a really good holistic approach about where we think certain aspects of the market are heading. And again, we do a lot of diligence on every company we do. If you look at our portfolio compared to a lot of different VC funds, we have far fewer investments, and the reason for that is we're very selective.
Hmm.
We get a chance to view hundreds of opportunities every single year, and make very few investments. And the reason is because we do a lot of due diligence. We go through a lot of iterations internally, and we've got a strong investment committee that has a lot of good opinions.
Yeah, no, you mentioned so many great points. I mean, I just want to, restate the ones that resonate more with me. The one is that, it's all about understanding how a change in A is going to create a change in B, C, D, and E, right? To understand,
Exactly.
be a little bit ahead of how things might look like. And sometimes, as you mentioned, sometimes we don't know how it's going to look like because we never faced those things before. Those things may be so new. It's always, I always say that it's also like we're living extraordinary times. Like there was never a pandemic, a war going on in Europe, a supply chain crisis, all happening at the same time. Like it is something very unique. So like the
The
circumstance,
everything bubble.
yeah, it's the everything. That's right, like everything is just coming together at this moment, and it's going to be very interesting, the experiences and the knowledge that we're going to come out with this. Like I'm sure that there's going to be books written, and there's going to be courses that they're going to teach in the future about what's going on right now, because it's very unique. But it's, I think that, as you mentioned, having a great team and having and a solid wide perspective of how things are moving, and how a small a change in a chain might change the whole thing. That is very important, and I love that you guys are publicly traded, because I've written about this before, on how investing in sports is like something that is not as available to everyone as as the public investor would like to, right? Like if you wanted to invest, like, I don't know, in Arsenal, or in like the NBA, or just in like the NBA playoffs as a project, as an event, you can't, right? It's Those are things that are most likely available only to private equity firms
Exactly.
or venture capital firms, and you guys act as venture capital firm, but are publicly traded, so that is an opportunity for the public investor to be out there investing in their favorite sports companies, or their favorite trends like betting or gaming and stuff.
Exactly. Yeah. Democratizing access to venture investments has always been a big tenet of what we do. And to be able to have the opportunity to not just participate in the late stage economy, but now in the early stage economy in sports, I think is exciting for a lot of different reasons. If you look at who our shareholders are, if you look at who our board is, we've got a lot of smart minds around the table, and a lot of great shareholders that quite candidly are sports fanatics. And I think there's probably some sort of correlation between people who work in finance and people who like sports. And there's a lot of the same people who do sports betting. So I think in general, it's a pretty exciting space to be in.
Yeah, I love that. I love that. And let's just talk last before we wrap it up. I want to ask you, because I must ask you, what are some of the different areas of sports or companies that you're excited about, that you're currently looking at? Is there one or two specific that you maybe want to share in terms of like things that you're currently looking for? Going back to the whole like investment conversation around green flags, red flags. What are some of the different sectors that are giving you good green flags that you're kind of like liking in the last couple of months?
Sure. So if I think about the initial thesis behind why we started SuRo Capital Sports. It was very much centered around the convergence of a bunch of different industries around sports betting, whether that be live entertainment, whether that be media, whether that be fan engagement, whether that be compliance. The economy hasn't existed yet for all these companies to get funding because PASPA was repealed in 2018. So DraftKings, obviously the most notable operator, is now publicly traded, um, and their technology behind it is all antiquated, simply just because they haven't had the opportunity to have underlying technology that they could license. And of course, they're not going to be focused on building the technology right now because the opportunity hasn't presented itself. So from an industry perspective, I really like a few spaces. I love the idea of live entertainment enhancement. I've been personally going to sports games for as long as I can remember, and being able to participate in what's going on, whether it's the halftime show, whether it's as the game's going on, whether it's betting while watching, I find that to be an incredibly interesting space. I think personalizing the way that we use sports betting apps and personalizing the technology that sportsbook operators can use surrounding, how to profile players and how to understand who the customer is from a psychographic perspective, I think is really interesting. If you look at the types of bets that are provided, in-play betting in Europe has been roughly 70% of the market, I believe, for some time now. And while I don't believe it's going to exist in the exact same fashion in the States, I think that it will exist in some way. And so from that end, micro markets providers, I think, are really exciting. Look at what Simple Bet's done with DraftKings as an example. If you think about how traders at sportsbook operators can manage all those in-play bets, I think giving them the tools they need to succeed is incredibly interesting. And the last thing that I find really interesting, this is probably the most boring one, is compliance technology. And I know that we're obviously investors in Compliable, so we've certainly made an investment in this space, and I think it's only going to get more interesting, and I think it's going to be necessary as sports betting becomes even more prominent in our daily lives, and regulatory bodies become more concerned with responsible gaming. I think different compliance tech regarding KYC and AML and understanding what responsible gaming looks like. I think all of those are really fascinating and investable categories, even though they might be more boring than investing in a micro markets company.
No, but they're important, right? And I love how you mentioned you're all into improving the whole fan experience, particularly in halftime. So I would recommend you guys to invest on the halftime snacks. That is probably gonna gonna
I love it.
improve the experience. Adam, man, this has been awesome. This has been great. We've been learning so much about you, about investments, about the whole macroeconomic environment, how that translates to venture capital, and everything that you guys have been doing at SuRo. This episode is packed with lessons, but I can't wrap it up without asking you a personal question. And the one I have for you is maybe you want to share some advice around what you personally what mental model you use, or what is something that you do for your mental health, right? We see all of like the news, and we see all the like the recession and inflation and investments going down, and our portfolio is all on the red. So I wonder, what is your mental model? How do you react to those things? What is something that you would advise people to do to remain mentally healthy during these turbulent times?
Sure. Yeah. I mean, the most important thing to me is keeping the main thing. And if you think about what's most important in life, what you couldn't live without, like I said at the very beginning of the episode, there's must haves and there's nice to haves. My guess is that for most people, the must haves would be family, friends, genuine relationships, time outside, breathing fresh air, and making sure that there's time for all those things in addition to work, in addition to stress. Right? No one's going to live a stress-free life. We uh, don't have that luxury. Um, for me personally, it's spending time with my wife, spending time with my dog, spending time with my friends and family. and truly enjoying the things that matter. Because when all this is over and there's not a recession and things are going great, it's easy to look to the economy and how well our stocks are doing and how well our crypto is doing as what makes us happy. It's just as important in those times to remember what the main things are, which is, at least for me personally, my relationships with my friends and family, and all the things in life that are probably more intangible than just a number on a page or a company. And that's not to say I don't love all the founders I talk to, because I do. And if you're listening right now and you are a SuRo Capital Sports company, believe me, we love you dearly. Um, but the most important thing, at least in my life, is those friendships and those relationships I have. And as long as those are front and center to me, I mean, how could you have a bad day?
Thank you very much for tuning in. If you enjoyed this episode, hit the subscribe button and leave a review on Apple Podcasts. If you enjoy learning about the business and technology behind sports, make sure you subscribe to the Sports Tech Biz newsletter. I'll leave the link in the show notes. See you all next week. Bye bye.